Have you ever been confused about what receipts you actually need to keep? Or maybe you just have a shoebox that's full of them and you know you're probably never going to look at any of them again. Believe it or not, it's actually pretty straightforward. Most of the receipts you can just toss on your way out the door of the store. And most of the rest of them you maybe only need to keep a few weeks. And the small amount that's left are the ones that you might need to keep for the long term. If you're new to the channel, welcome. My name is Zachary Schleck, your personal finance coach, where my main goal is to help you win with money by gaining control of your personal finances. And in this video, we're going to look at what receipts you can toss right away, which ones you only need to keep for a few weeks, and which ones you should file away for the long term. Stay tuned. Now, there's just a couple reasons that you might want to keep receipts for the short term. One is if you know that there's a possibility you need to make a return, whether that's clothing or an item that you're not positive you want to keep, obviously keep the receipt just to make the return easier. Another one is at a restaurant, if you pay with a card and leave a tip, it's best to hang on to your receipt just in case the tip amount was entered incorrectly. Then you can go back and you have your receipt to dispute the charge. Most of the time, you shouldn't need receipts for budgeting purposes. If you use a phone app or something like that, then it's really best to put purchases in right away when you make them. And if you use a debit card or credit card for the purchase, then you can always go back to double check what the amount was if you need to put that into your budget after the fact. And if you use cash, then really the time to enter cash into your budget is when you withdraw that from your bank account, not when you go to spend it. Because if you go to withdraw that money and you don't know whether you even have room in your budget, then it's already too late. So when you withdraw the cash, know what budget category you're pulling that cash out of and enter it into your budget at that point. And then when you go to spend the cash, it's already entered in your budget and you don't have to worry about it. And finally, the big question is, what receipts should you actually hang on to for the long term? This is going to be anything like a big expense or a big purchase or items that come with a warranty. You need that receipt for proof of purchase. Any kind of medical expense or business expense or purchases that you make to update or maintain large asset items like cars or your house. And finally, the really big one is for tax purposes. So first, any kind of big purchase that you make, whether that's electronics like a TV or a laptop or a phone or something like that, or maybe it's an appliance or a tool, really anything with a warranty, you want to hang on to that receipt so that if it breaks, you can go back and refund it and get a new one. And so it's best to keep that receipt either with the item itself or maybe with the owner's manual and just keep it maybe taped to that. Or you can keep a separate file and just put those receipts all together in a file. For medical expenses, it's best to hang on to these receipts for tax purposes, which I'll cover in just a minute, as well as insurance purposes, and any expenses that you make with an HSA card or a health savings account card. It's best to hang on to those because those are considered tax-free, and if the government ever wants to check what you actually spent that tax-free money on, then you have the proof of purchase for everything that you spent the money on. Now, for business expenses, if it was a purchase that was made with a company card, then I guess it depends on your company's policies, but generally you need to provide a receipt for whatever that purchase was. And if it was an expense that was made out of pocket that you need reimbursement for, again, you probably need to provide your company a receipt of what that is so that you can get reimbursed for it. Now, if you're a business owner or you're self-employed or an independent contractor, then I'm not going to be able to help you too much with this video. But again, generally it's probably a better idea to err on the side of keeping any business-related receipts. Next is for tracking and managing high-value assets. Anything from house to a car to boat, motorcycle, even a side-by-side or ATV. Or maybe there's something else in your life that I can't think of, something that maybe doesn't have an engine or a roof. But really any kind of big ticket item that requires upkeep and maintenance, or maybe you do major upgrades or renovations to it, or in the case of your house, if you update appliances. Really, it's best to keep receipts for these types of things just for general record keeping. And that can be useful for like insurance purposes if something were to happen to that item, or if you go to try to sell that item later on. And finally, probably one of the biggest categories for this video is going to be in regards to taxes. What receipts do you need to keep for tax purposes? And previously, I've made a video that goes a little bit more in depth about how taxes are calculated and what goes into that calculation. And I'll put a link to that up here. So if you haven't seen that and want to, feel free to check that out. But basically, there's three big things that can help reduce your taxes. There's above the line deductions, there's tax credits, and there's itemized deductions. I think one of the only above the line deductions that you might need to keep receipts for would be educator expenses up to $250 if that applies to you. And for tax credits, any childcare expenses can be counted if both you and your spouse work, and that childcare is allowing you to work or at least look for work. And the third and final way to reduce your taxes is by taking itemized deductions. However, it's important to remember that you can either take a standard deduction or take itemized deductions. And for 2020, the standard deduction is so high that most people will probably just take the standard deduction. And if that's you and you don't need to itemize your deductions, then you don't need to keep receipts for any of these things that I'm about to go over. So if you want to keep watching just to see what those are, and just for peace of mind of knowing, okay, I don't need receipts for that because I'm taking standard deduction, don't need receipts for that, then you can keep watching. But anyway, some common itemized deductions that if you're itemizing, you need to keep receipts for these things are charitable donations, whether those are monetary gifts or if you go to drop stuff off at like a Salvation Army, make sure you get receipts from them for just a rough estimate of how much those things are worth. And also for any miles that you drive for charity, you can count those under the charitable donations itemized deduction. Another itemized deduction could be unreimbursed medical expenses. But the big caveat to this one is that you can only deduct these medical expenses once they are in excess of 7.5% of your AGI. So again, I won't go into the details of that whole calculation. Go check out my other video for that. But basically, if your gross income for the year is $125,000 and your AGI is $100,000, then your medical expenses have to be in excess of $7,500 in order to start itemizing those as a deduction. If that does apply to you, then that can include any expenses that either aren't made with HSA funds because those are already tax-free, and obviously insurance payouts don't count towards this because those aren't out of pocket. But any other out-of-pocket expenses made for either you or spouse or dependents, these can include anything from obviously insurance premiums to copays. And beyond that, there's a pretty exhaustive list of what kind of medical expenses count towards this. So here's just a few of them that I'll list, but go online to get really a more thorough list if this applies to you. And the last itemized deduction that I'll go over, where you may need to keep a lot of receipts for this depending on your situation, is called the SALT deduction, or the state and local tax. And this is kind of an either or deduction where you can either deduct your state and local income tax or your state and local sales tax. And obviously you want to take the greater of the two. And for most people, the state and local income tax is going to be the greater, as well as just the easier to calculate. But that might not be true for you. If obviously your state doesn't have any income tax, then that's going to be zero. And also, if you made any kind of really large purchases or put a lot of money into renovations during the year, then those sales taxes might have exceeded the income tax that you paid. If you didn't happen to keep all of the receipts that you need, then the IRS does provide sort of a standardized table for you, which is based on your state's sales tax, your family size, and your income level. But if you did make a big purchase or put a lot of money into renovations, then your own calculations of how much you actually spent on sales tax might exceed that standardized table. So you're probably going to be better off if you just do that calculation yourself. So I just went over 3 common itemized deductions, but to be honest, there's probably at least another 100 out there. But like I said before, most of you are probably taking the standard deduction anyway. And those of you who are itemizing, at this point it becomes a pretty personal question as far as what itemized deductions your specific situation is eligible for. So I won't continue to bore you, but I will leave it at this. If you know that you're planning on itemizing your deductions for the coming year, or if you think that you might be, then I would just hop online, do a little bit of research as far as what itemized deductions you might be able to take. So that way you know throughout the coming year what receipts you might need to keep for when you go to do your taxes and you're itemizing your deductions. So if this was helpful for you guys, if you guys like this video, please go down below and hit the like and subscribe button to the channel, where I'll have a lot more videos about all kinds of personal finance topics. And if you have any questions or comments at all, please leave those down below too, and I will try to get back to you as quickly as I can. And again, I hope this video was helpful. If you have that shoebox full of receipts, and I hope you have a little bit more confidence now about what to do with it. And moving forward, hopefully this helped you know which receipts you can just toss right away and which ones you should probably hold on to. So thanks again for watching, and I'll see you on the next video.